Well, holy smokers, ladies and gentlemen, the earnings insanity has officially started. We have massive amounts of companies reporting earnings. I want to touch on 4 of them here in this video. Well, the first one being Snapchat. Snapchat, by the way, as far as the stock after hours, is only up about 1.5%, and that was after it was up over 10% initially after hours, okay? eBay stocks making a pretty big upward move, about 5% there. Irobot is one of the stocks we'll talk about here. That one's down about 15% after hours, down nearly 20 bucks a share, okay? And then we have Texas Instruments, who also reported earnings after the bell. Huge semiconductor company, very important to pay attention to. And that one's not making much of a move, a little, down less than 2% on that one, okay? First one up here is Irobot. Irobot stock plunges after earnings show slight sales miss. Irobot continue to be a volatile stock. Irobot, which sells the Roomba vacuum cleaner, some of you guys may know. Irobot reported first quarter profit of $22.5 million or 78 cents a share on sales of $237 million, up from earnings of 71 cents a share, so that's nice, about 7 cents up year on year, on revenue of $217 million the previous year, so basically revenue was up about 20 mil as well. Analysts on average expected Irobot to report earnings of 60 cents a share, so a huge beat there, on sales of 251s, but they missed big on revenue, so that's kind of interesting that analysts were way off as far as the EPS goes, and they were way off as far as the revenue as well, but they're on the opposite sides. That's very strange. You don't usually see that. With the stronger profit than expected, the company increased its expectations for the full year earnings to be in the range of $3.15 to $3.40 a share, from $3 to $3.25, okay? So in terms of these earnings, very mixed bag there with the obviously a big revenue miss there, but the EPS had a very nice beat. And we've seen this with company after company, it seems, so far that have been reporting numbers this earnings season. We're seeing a lot of revenue misses, but EPS beats, and a lot of those EPS beats are because of share buyback. So interesting, a very interesting earnings season so far. As far as the Roomba, they sell, a very vast amount of different Roombas, okay? Everything starting at, the beginner Roombas, I guess you can say, they start at around $299, all the way up to some of these Roombas can go $1,000+ guys. It's absolutely insane. If we look at Irobot in terms of its stock valuation, this is a company that does trade very richly, okay? It's always traded rich as long as I've been covering the stock, which is literally like at least 7 or 8 years now. Trailing P on this one of 42, forward P on this one of 33. After tomorrow, those should come down a bit because obviously they're expected to do even better than a lot of folks expected as far as EPS went. So those P's should come down, and also the fact that the stock is going to be down big tomorrow. So maybe tomorrow you can pick this one up at a forward P of maybe 26, 27 if you're interested. I'll just say Irobot's always been a stock I've liked because I do like the whole robotic vacuum cleaner business, but there has been a lot of competition that's come in that space, and that is something you got to kind of think about in regards to Irobot before you ever buy that stock. There is a lot of competition now. If you go to your local Target or Walmart, you're going to see competitors for the robot vacuum cleaners. You go on Amazon, there's a lot of competitors now, so it is something. They're still got the brand name there, they still got the big market share, but it is something to think about with all these competitors and a lot of these Chinese knockoffs trying to eat into what Irobot has built over the past decade or two in the robotic vacuum cleaner space. All right, next one up here is Texas Instruments. Okay, once again, huge semiconductor company. Texas Instruments says slowdown in chip demand may continue. All right, chipmaker Texas Instruments said on Tuesday a slowdown in demand for microchips that started late last year may last a few more quarters. Not good news for any semiconductor stocks out there. All right, the wording from the company, often seen as a bellwether for the semiconductor industry, dragged its shares lower, as we already spoke about. The CFO, what did they have to say? They said, we have just completed our second quarter on a year-on-year decline for Texas Instruments, but typically the industry would have 4 to 5 quarters of year-on-year declines before growth resumes, the CFO said. We are not trying to forecast the cycle, but simply offering some historical perspective. So reading through the tea tree leaves there, essentially, they're saying, okay, we've had 2 straight, year-over-year declines in chip demand, all right? Here's what we kind of think. So 2 or 3 more quarters kind of expect of chip declines there is basically what they're saying at the end of the day. So, which means these semiconductor companies, a lot of them probably won't bounce back as far as their numbers go until maybe 2 or 3 quarters into the future, okay? TI said it expects second quarter revenue to be between $3.46 billion and $3.74 billion, in earnings per share to be between $1.12 and $1.32. That's a big range there. Analysts were expecting revenue of $3.67 billion, so toward the higher end range, and profit of $1.24 per share for the second quarter. The outlook is weaker than consensus, but not as bad as feared, is what an analyst has to say. Revenues in the first quarter fell 5% to $3.59 billion, but beat analyst average estimates of $3.48, so it is down 5% year over year. Net income fell to $1.22 billion, or $1.26 a share for the quarter, basically down from $1.37 billion. So needless to say, revenues down and earnings per share are down for Texas Instruments, and we've seen this across the semiconductor companies. Basically, if you're in the semiconductor space and you sell, you rely a lot on smartphones, which is what a lot of these guys rely a lot on. Smartphone sales, laptop sales, tablets, all these sorts of things, right? And especially the smartphones, we've seen with Apple and Samsung, they're both reporting weak numbers at the end of the day in terms of the amount of smartphones they're selling. It's just not a strong cycle, and in my opinion, like I've said a million times on this channel, I don't think we'll see another big cycle until we see the 5G cycle comes, and we're probably still at least a year off of that coming. So needless to say, the semiconductor stocks, it's just kind of, there's definitely some good values out there if you're looking at a long-term perspective, but if you're expecting any type of great short-term results with any of the semiconductor plays, including Texas Instruments, it's just not there right now. That's the bottom line, okay? Next one up here is eBay. Then we'll get to the last one, which is Snapchat, okay? As eBay continues to work through a restructuring strategy, the e-commerce marketplace and online auction pioneer reported earnings for the first quarter of the year that should keep some of the activists at bay. Basically, there's been a lot of activists trying to put pressure on eBay, do different things. The company reported revenues of $2.6 billion and non-GAAP net income of $608 million, or diluted earnings per share of 67 cents, 57 cents on a GAAP basis. Both numbers, in fact, exceeded analyst estimates. That's very good for eBay. On average, they had predicted eBay to report EPS of 63 cents and revenues of $2.58 billion. Okay, so slight beats there. As far as what the CEO had to say, he said, "We delivered a solid first quarter with revenue and EPS. Our initiatives to create a next generation payment and advertising experience are on track. We saw healthy buyer growth and disciplined cost controls, and we continue to simplify the buying process while remaining focused on seller success." Basically, eBay's in a spot right now where they're trying to expand their business, and they just feel like they really can't expand that business anymore when it comes to kind of the auction side of their business and kind of like the bids and kind of what eBay pioneered. That was probably 20 plus years ago now when eBay first came out, and everybody kind of knew eBay for the place you go and bid on different items out there, okay? And if we look, we can see it in the numbers. The analyst estimates for this year are just very bad for revenue growth. Like this quarter, they just reported analysts were expecting no growth. Next quarter, less than 1%. The current year, they're expecting around 1%. So needless to say, eBay's just been on a spot where it just seems like, can this company grow anymore? And up until now, a lot of people just haven't seen it, okay? And indeed, the guidance eBay is providing for the quarter and full year ahead speaks to those challenges. It expects in Q2 to post revenues of $2.64 billion and $2.69 billion, growth of just 2% to 4%, okay? But needless to say, it's better than what analysts were expecting. Analysts were expecting 0.4% growth. So if they can come in at 2 to 4%, needless to say, like that's a good beat there. But at the same time, 2 to 4% growth, and when you look at all the other great tech companies around eBay are growing, 10%, 15%, 20%. It kind of makes eBay look like, what's wrong with you, eBay? Like, you're the slacker of the bunch, okay? If you look at eBay, I will say, as far as evaluation, it trades cheap, okay? Forward P of 12 on this company. And if you compare that to a lot of the other big tech companies, obviously, out there, a lot of them trade at 20 to 30, and some even, 40 and above as far as their forward Ps go. So at least that's one good thing for eBay. You are, getting some value there, but you're not going to get much growth. That's the bottom line, okay? And the last one up here is good old Snapchat, okay? Snapchat makes a comeback after the release of its rebuilt Android app. Snap is heading in the right direction again. The company revealed in its earnings release today that its daily user base has grown by 4 million people globally. It now has 190 million daily active users, up from the 186 million people it had consistently been using the platform in the last 2 quarters. The updated number is still 1 million people short of Snapchat's peak, which was just before it went public in 2017, but obviously it's good news that they're at least increasing again. Snapchat CEO Evan Spiegel said in the prepared remarks that the platform reaches more 13 to 34-year-olds in the US than Instagram, but did not elaborate on why or how its user base suddenly grew. He said Snapchat reaches 75% of 13 to 34-year-olds and 90% of 13 to 24-year-olds. You know, that statement there, I don't know, you know, how he's looking at that, or I don't know if that's actually true. It seems a little crazy. He's basically saying that, you know, the platform reaches more 13 to 34-year-olds in the US than Instagram. I'm not convinced of that personally. I mean, I know Snapchat is obviously bigger, you know, a big platform with the younger generation, but I'm like, I can't see it really being bigger than Instagram personally. Who knows? I don't know what metrics he's looking at, what numbers he looks at, and usually a lot of times Facebook, which owns Instagram, doesn't even disclose to that level, like what age bracket. So I'm not convinced of that, just to be honest. But needless to say, it's good they're growing again. In terms of some of their more financials, they took a loss of 10 cents a share versus 12 cents was expected. Revenue came in at 320 million, very strong number there, versus 307 was expected. That's very good for the company, obviously. Daily active users came in at 190 million versus 187 was expected. Average revenue per user, which is otherwise known as ARPU, came in at $1.68 versus $1.62 was expected by analysts there. So, you know, Snapchat's kind of in a situation, it reminds me a lot of Twitter back in the day when, you know, Twitter went public. I think it was around 2013, and at first it was a hot stock, like Snapchat was hot, and then, you know, Twitter just kind of, you know, started to fall off. Snapchat kind of did the same thing. Now Snapchat's kind of on the comeback, and they're, you know, trying to show these good numbers and hey, things are improving and whatnot, but we just don't know if they can ever really get to a big scale. Like usually if you're in the internet space, advertising space, and you really want to make, you know, big dollars, you got to get to big scale, and 190 million daily active users usually isn't going to cut it for a company like Snapchat. They got to get massively bigger from here if they really want to pull in big profits in the future. So we'll see what happens with it. It's a very interesting spec stock. The most interesting thing is, I think about this move after hours. So it's up, you know, 1.5%. That's like almost a nothing move for Snapchat. I mean, usually the stock moves 10, 20, sometimes more than 20% after its earnings. And Snap was supposed to see at least a 15% move is what most traders were expecting from this stock. So the fact that it's only going to move maybe 1.5%, or at least as of right now, who knows what could happen tomorrow. Maybe it does move 15%, but I'm saying that's usually highly unlikely. If a stock, usually, you know, after they had their conference call, which Snapchat already has, they release their numbers. If it's, you know, 1.5%, then it's probably not going to move huge tomorrow. Just bottom line with that stock, it would be very out of the ordinary if this stock actually moved big tomorrow, like a 10% plus move after very little, you know, after hours action there, guys. So we'll have to see what happens with it. Anyways, let me know if you have an opinion on Texas Instruments, Irobot, Snapchat, eBay, any of the stocks we discussed in that comment section. I want to hear from you guys. If you own any of these, if you're interested in any of these stocks, I would love to hear from you guys as always. Thank you for watching and have a great day.